China is perceived as someone who has taken preventive measures to safeguard their economy. Undoubtedly, China made a pivot from real estate to industrial sector. They spent trillions of dollars to build their manufacturing capability. It pushed China to be one of the largest exporter of automobiles, overtaking Japan, Germany, South Korea, and US. Despite rampaging car sales by Chinese automobile companies globally, in China, Volkswagen captured 14% market share and remain the topmost auto manufacturer in China. Exports for China has been supportive to growth led by auto, whereas real estate has continued to weaken because of the excessive speculation of the past. Many provinces in China have revised their growth numbers lower. Many have cut their target GDP growth. It shows that while on face of it, Chinese economy is not impacted by Middle East crisis, reality could be different. To some extent, China is having excess capacity, and despite their dumping goods across the globe, capacity utilization has started declining as excessive capacity is not being, they are not able to run those capacities to the fullest extent. This is also reflected in LNG imports of China. Like other parts of the world, their import has declined because of supply chain disruption. Chinese government revenue also seems to be flattening out at about 25% of GDP. It's moving in that band almost since 2010, and post 2016-17, it has seen marginal decline. The impressive part of Chinese economy is their spending on research and development. It is expected that over next couple of years, China will overtake US in terms of R&D funding. Undoubtedly, China is planning for future. There is maximum number of nuclear reactors under construction in China.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.